China just fired a bombshell right at the United States. The trade war has been disguising the true conflict between the two nations, technology and innovation. Who will build the computers of the future and who will become a serf to the other? And Trump's blacklisting of the highest-end computer chips being exported to China put China in an existential problem. They couldn't compete and they were going to be left behind in the dust if they didn't find a solution. The end result was that full-blown trade war that we now know so much about. Retaliations, rare earth metal export controls, and a whole swathe of problems in China. But it seems that China may have just turned the tide. Trump gave a peace offering and China on the surface may have spat in his face and rejected it because they found a solution on their own somehow, and now they may be on track to overtaking the United States to becoming the single most important economy and country in the world. And today I'm going to explain exactly what has just happened with this chip war, why it's so worrying for the US and the rest of the world, as well as taking a brief look at global bond yields and the US's attempts to keep the dollar dominant through Argentina of all places. Since 2018, the US government has sought to strengthen US export controls of advanced semiconductors with the stated intent of both restricting People's Republic of China's access to the technologies and their ability to produce advanced chips and curtailing PRC access to related computing and AI applications. US actions have also sought to sustain US leadership in advanced chips, related parts of the semiconductor supply chain and computing and AI applications, while slowing China's development of competitive capabilities. So really, this all starts in 2018 with the first export restrictions on chips being put out there to China. The US stated openly that the aim of this was to stop China being able to manufacture or use the most advanced computers in the world and to stop them from being able to compete with the US in the AI competition, as the hardware that AI runs on is incredibly important, and China at this point in 2018 doesn't retaliate. But then in 2022, well, the US, they expand their export controls to impact chips made in other countries as well, but have elements of design or manufacture done in the US, and so suddenly those export controls, they apply to far more chips and far more technology being exported from countries like Taiwan or the Netherlands, and China still doesn't retaliate. But then comes 2022 when the US expands those export controls even further, and then any Chinese companies seeking to import advanced technologies for the purpose of AI or supercomputers, they would then have to apply for export or import licenses, and those licenses are being applied for under the presumption of denial. So China didn't retaliate yet, but they gave a firm warning stating that if these restrictions continue to get worse, they would finally retaliate. And this was the key turning point. The US was actively trying to remove China entirely from the global supply chain of the most advanced computer parts, from making the machines that make the computer chips all the way down to designing or building even the tiny parts of the computer chips themselves. Then in 2023, the US pushed further. They closed a bunch of loopholes that China had been using to try and get around those export controls, and they expanded those controls to impact more products. And finally, China stood up. They fired back at the US. They started putting export license controls on gallium and germanium and high-grade graphite, all minerals and supplies critical to making advanced computer parts or batteries. In 2024 and 2025, the US launches more restrictions. They target 140 different Chinese companies and entities, banning all of them from importing anything advanced. And they went on to ban the export of the highest grade and most valuable products from China altogether. China retaliates by expanding their export controls for these rare earth minerals and trying to flex their international might by claiming that any products made in other countries with certain amounts of Chinese minerals count as Chinese exports and therefore can't be delivered over to the US either. Now that's a long timeline to basically say that the US cut China out of the most advanced computer manufacturing in the world, making it basically impossible for China to use the best computers, to make the best computers, or even to make the machines that make the best computers. And China, in retaliation, locked the US out entirely from accessing the materials needed to make the best computers and machines, as so much of the world's production of these minerals comes from China. And so far, it really did seem like China had been getting the short end of the the stick. All of these escalations in this little chip war, they were launched by the US. The other countries that were essential to this industry, like the Netherlands and the Taiwan, they are aligned with the US already against China, so they complied with export controls. And as AI has been getting more and more visible and important, the US is racing ahead of China in the global competition, now producing 8 of the 10 best ranked AI models in the world, with China producing the other 2, and their best only ranking 5th. But this whole trend of worsening relations and an escalating chip war sort of flipped upside down just a couple of days ago. Trump granted Nvidia permission to ship its H200 AI chip to China in exchange for a 25% surcharge, a move that lets the world's most valuable company potentially regain billions of dollars in lost business from a key global market. The decision was announced by Trump in a post, capping weeks of deliberations with advisors about whether to allow H200 exports to China. Trump said he'd informed the Chinese president about the move and that she had responded favorably, and added that shipments would only go to approved customers and that chip makers like Intel and AMD would also be eligible. So Trump has suddenly changed his tune, apparently, and is going to allow companies like Nvidia and Intel and AMD to export some very advanced chips to China which had previously been banned. Now, the exports, they would have to be approved based on which organization within China actually buys them. So in theory, some AI companies or military tech companies, they wouldn't on the surface be allowed to buy these chips, but in reality, the Chinese government would assist these AI and military companies to commit fraud to help them get them anyway. So that part is kind of moot. These chips will go to the military and AI companies if they go into China at all. Now, to really understand what's going on here, there are 3 chips that we very quickly need to cover and establish so that we know exactly what we're talking about. There's the H20, the H200, and the B200. Now, the H20 here is a derivative of a design that Nvidia created in response to limitations imposed by US authorities on the capabilities of chips that could be sold to Chinese customers. So the H20 is specifically made to be weaker than what American customers get so that it is legal to be sold to China, and it's about as good as what the Chinese can make themselves. Then we have the H200, which is the ultimate version of Nvidia's previous Hopper generation. It was first unveiled in 2022, became the backbone of the explosion in AI computers, and went into mass deployment in 2024, and is still on sale despite now being superseded by a newer design. So this is Nvidia's best chip of their previous generation. It's a few years outdated now, but it has been responsible for most of the AI actions taking place around the world every single day. This is essentially the backbone of the standard AI that people like you or me may use. This is the one that China is now going to be allowed to buy, and this is much, much better than what China can currently make. Then there is the B200, which is Nvidia's current flagship chip. It went on sale just in late 2024, very recently, but this is not going to be allowed to be sold to China. In granting permission for exports of the H200, the Blackwell chips or the B200 are not part of this deal. Now, the B200 is the single very best chip in the world. It's just a year old, it's incredibly expensive, it's not really necessary for those people just using ChatGPT instead of Google, but it's very essential for the companies trying to build the best AIs in the world, or the companies doing these really incredibly complex tasks with AI. This chip is still not going to be legal to be exported to China. It's still going to be kept away from China as far as possible, and it is about 10 times better than anything China can make. Now, this here is a visual representation of a load of different chips on the markets. These yellow ones here are Nvidia chips. This is the H200, 4 terabytes per second in memory bandwidth and 2.4 thousand in total processing performance compared to what China can create. This is their single best chip. And you see that it's a little bit on par. Maybe the Huawei chip has superseded it a little bit. But this is the H200, the one which is now going to be allowed to be exported to China, and it is clearly better than anything China can make. The B200, on the other hand, is all the way up here. The B400, or 300, sorry, is all the way up here. Literally 10 times better than anything China can make. These will still not be able to be sold to China. So China is now going to be able to buy en masse these H200 chips, and that's on the surface a massive win for China. Their AI, their computer industry has been massively hampered by these export controls, and whilst their retaliations on rare earths had been a concern to the West, it hadn't been an immediate damaging threat as what China had seen with the chip controls. So why then did we start to get articles like this coming out immediately after we hear about Trump's offer to allow China to buy H200 chips? Beijing is set to limit access to NVIDIA's advanced H200 chips despite Trump's decision to allow the export of the technology to China as it pushes to achieve self-sufficiency in semiconductor production. Regulators in Beijing have been discussing ways to permit limited access to the H200. Buyers would probably be required to go through an approval process, submitting requests to purchase the chips, and explaining why domestic providers were unable to meet their needs. So China, on the surface, it seems like they don't really want these H200 chips, as they're stating that Chinese companies, they'll have to apply to import them at all. And even then, they'll have to explain to Chinese authorities why they can't just buy domestically made Chinese chips instead. This isn't completely surprising though, as when Trump opened up these weaker chips, the H200 that we mentioned earlier, to export to China in the past, well, China wasn't too sure about that either. When Trump previously eased restrictions on the less advanced H20 chip, authorities in Beijing summoned NVIDIA to discuss alleged security risks, signaling to domestic importers that they should steer clear. So the H20 chips were pretty comparable to what China could already make, except that the Chinese would have been supporting NVIDIA's growth and revenue by buying lots of them, whilst literally paying a huge amount of money to the US government directly in tariffs and that weird 15% profit share agreement that Trump made with NVIDIA. So for the most part, the Communist Party lightly told Chinese companies, don't buy these H20 chips, buy from Chinese domestic companies instead, and most Chinese buyers listened. The difference this time round is that the H20 chips weren't that special. The Chinese companies could already compete with them, companies like Huawei. But from the information we have at the moment though, China cannot produce anything to compete with the H200 chips. So there's basically a few options for what this could really mean and what's really going on behind the scenes. Maybe China has better technology than we know and that they can produce chips able to compete with or even beat the H200, or they'll be able to very shortly, and the West just hasn't really had a chance to use or review them yet, so we don't know this. And so China, they don't really care about the H200's technical abilities, and they don't want Chinese companies importing them for no reason when there will be domestic alternatives. Or maybe China really can't compete with the H200, but that China is going to be able to compete with them very, very shortly in the future, but only if Chinese companies support that domestic manufacturing base and send their money back to that native company like Huawei so that they can reinvest into development and get them better. Or maybe China is just trying to save face here. They're just trying to pretend that this isn't a big deal, when in reality, the H200 chips are going to be revolutionary for China's AI companies in particular. Now, what we do know for sure is that China knows these advanced chips, and actually anything related to computers in general, are very important. And China does not want to be reliant on the United States for access to these chips whatsoever. The Ministry of Industry and Information Technology, in China this is, recently added AI processors from Chinese groups, including Huawei and Cambricon, to its government-approved list of suppliers. This step was designed to enhance the use of domestic semiconductors in China's public sector and could be worth billions of dollars in new sales to local chip makers. So essentially, these Chinese companies which have some sort of government control over them, they are only allowed to buy from these approved suppliers, and domestic Chinese chip manufacturers are now part of those approved suppliers. So China is certainly making concentrated efforts to avoid reliance on American technology, but that's just not easy when American tech is simply better. An executive from a state-owned financial institute said that while it had allocated $14 million to buy domestic AI chips, so chips made in China, from that list this year, most of those Chinese processors that they had bought were now just sitting idle. His company's quant trading models were built based on NVIDIA's hardware, and a switch to Huawei's processors would result in a significant amount of adaptation work, including rewriting code in an unfamiliar language. Such reluctance to shift to a new architecture was common in a transition phase, according to one Chinese policymaker who added that the country needed to gain greater technological independence. The growing pains are unavoidable, but we have to get there. So it does seem that actually this might all just be a bluff from China. These H200 chips, these NVIDIA chips, really would be incredibly impactful and helpful for China, but China is scared of becoming addicted to them in case Trump shuts off the supply chain once again. And there is actually evidence to suggest that this might be the case. Chinese AI startup DeepSeek has relied on NVIDIA chips that are banned in the country to develop an upcoming AI model, according to a new report. NVIDIA's Blackwell chips were smuggled into China through countries that permitted their sale. DeepSeek tacked chips that were installed in data centers in unspecified countries, then dismantled and shipped them to China after clearing inspection by companies developing server equipment. So China's DeepSeek AI has already been stealing and basically committing international fraud to get access to the B series chips already, as opposed to whatever domestic Chinese alternatives they claim to have built the AI on. And it actually goes further. DeepSeek drew global attention in January when it debuted an AI model that was competitive with Silicon Valley's best and said it had built at a fraction of the cost. The startup was funded by the Chinese hedge fund Flyer, which had amassed 10,000 NVIDIA GPUs in 2021 prior to the US bans on exports of sophisticated NVIDIA chips. And so even this revelation that China's been smuggling in these Blackwell chips isn't that new, as DeepSeek had already claimed to have built everything they had over the last few years on old NVIDIA chips that they bought before these export controls came into force. Now, why does this matter? Well, DeepSeek is China's #1 AI company. It produced their single best AI model, and nothing else in China really comes close. And to top this all off as well, we recently had other news showing that, yes, these H200 chips, and in particular the Blackwell chips, are incredibly important for China. The US Department of Justice has detained 2 men for allegedly violating export control laws by attempting to smuggle at least $160 million worth of NVIDIA chips to China. The department alleges that the men operated a smuggling network that spanned the Houston business and several warehouses across the US, which replaced NVIDIA labels from H100 and H200 AI chips with the fictional Sandikan brand before shipping them. So even with the export controls, China are already making concerted efforts to smuggle these H-class chips into China. And let's be honest, these 3 smugglers, they didn't raise $160 million to buy these chips and smuggle them into China alone. They did this with the knowledge, the approval, likely the help and the funding of the Chinese government and their authorities. So yes, actually, the H200 chips are essential for China. The most likely truth behind the news that China isn't excited about these H200 chips is that it's all just a front and China wants to save face, whilst in reality, it's an incredible win for China's tech industry to get access to these chips so easily. So if this is such a big win for China, why has Trump loosened these export controls and allowed China access to the chips that they are so desperate for? Well, NVIDIA's CEO has long argued that blocking sales of high-end chips to China would spur local rivals to close the gap more quickly. Already, Chinese chip makers have proved their ability to innovate. Some have prioritized processing power at the expense of energy efficiency, whilst others have tightly integrated hardware with software to squeeze out better results. In the absence of NVIDIA's chips, Chinese AI developers will start to optimize their models around domestic offerings, coming from the CEO of NVIDIA. David Sachs, who's Trump's AI advisor, has also taken up this cause. He's argued that there is a case for withholding America's best chips from China, like the Blackwell B200 or B300 series, but not for cutting it off entirely, which would only deepen the Communist Party's resolve to develop domestic alternatives. His view appears to have prevailed over that of the China hawks in Trump's circle, who argue that selling powerful chips, even slightly older ones, is risky, especially given their potential military applications. So America already has the best chips. The US knows this and China knows this as well, but the fact that America has shown it is willing to cut China off means that China doesn't want to be reliant on American chips at all, and so they're pushing incredibly heavily for domestic alternatives as much as possible. Now, the logic behind Trump's action is that allowing these China to have these H200 chips that'll mean that the incentive for China to build better chips is lower and that the domestic alternative will be slower to be produced, and so America stays ahead. Very specifically, Trump is not allowing the best chips, the B series chips, to go to China, just the previous generation, which maintains America's lead in the technology whilst giving China a little bit of a poisoned chalice or golden handcuffs. Do they buy the American chips and risk getting addicted to American tech, making them more reliant and more exposed to Trump's antics in the future? Or do they use domestic chips, weaker chips, and fall further behind in the AI race and end up reliant on American tech in that space instead? It is not an easy problem for China to fix it. Of course, there is also the boost that this deal will give the American economy, right? The American government and Nvidia as well. We're probably talking something to the tune of maybe $10 to $20 billion a year in extra revenue for chip manufacturers in the US from this deal. 25% of that revenue is going to go straight to the US government in the form of this weird surcharge tax, and the rest is going into the coffers of companies like Nvidia, where it will likely be spent on making even better chips for the future. So honestly, I do actually think this is the right move for America. The most likely potential bad outcomes of this is really that China doesn't buy many of these H200 chips, and so there's no major impact. But we already know that China really do want these chips. That's why there is this international smuggling ring, and the H200 chips certainly aren't going to speed up China's domestic alternatives. Now, everyone with money in the S&P 500 then is likely going to see a nice little boost to their wealth as Nvidia's revenue and share price likely increases. So this does seem to be a win-win, to be honest. Now, there are lots of problems that we all need to be paying attention to at this moment. AI itself is pretty clearly in a bubble. The circular deals going on amongst OpenAI and Nvidia and the like, they are textbook financial engineering and wizardry designed to trick investors into thinking that things are better than they are. And we have higher than ideal inflation, we have interest rates remaining far higher than comfortable, and many stagnant economies, with even America's GDP only really rising over the last year because of investment into AI data centers. Now, the question I keep seeing on my channel is, how can I protect myself from these problems? And the issue here is that, honestly, you really can't protect your assets from an everything bubble because all asset prices are impacted by an everything bubble. So when there's a crash, we are going to see asset prices fall across the board, including supposedly risk-off assets too. What you can do, though, is focus on building up passive income instead, which isn't dependent on asset prices and so won't be impacted by the AI bubble popping, and that's exactly what I've been doing recently. I've been building up my online passive income streams, not through YouTube, not through these videos, because believe me, running this channel is not passive, but from another strategy I've been building and honing in on recent months. Now, if you've seen my videos before, you've probably heard me talk about my free cash flow or my free passive income masterclass, where I teach you how to build an online income to $3,000 a month guaranteed. I've run a few of these classes over the last month or so, and the response has been huge, so I do want to say thank you, but I'm also announcing that I'm going to be running the final ever free masterclass this week, so now is your final chance to get your free ticket and learn. The class is really simple, 100% free. In it, I give you a step-by-step tutorial and guide that you can follow to build an online passive income up from scratch to $3,000 a month guaranteed. You don't need to be a computer scientist to know how to code or to have any experience in making money online or passive income before. I'll give you all of the tools you need in the free class and a foolproof step-by-step instruction manual to make it super simple to follow. Again, this is the last week I'm going to be running this free masterclass, so don't miss out. Click the link down below in the description to save your space now before it's too late. Now, before we finish for today, I do want to talk about a couple other things first. Finally, just a little bit about interest rates, because there is a global shift going on right now, and it's Thursday. We just saw yesterday the Fed announce another interest rate cut. Global bond yields have risen to highs last seen in 2009 ahead of a key Federal Reserve policy meeting, signaling concerns that interest rate cutting cycles from the US to Australia may be ending soon. Yields on a Bloomberg gauge of long-dated government bonds have returned to 16-year highs, with money market bets underscoring that sentiment. Traders are now pricing virtually no more rate cuts from the ECB, the European Central Bank, whilst betting on all but certain hike this month in Japan and 2 quarter-point increases next year in Australia. Even in the US, where the Fed, this is a little bit outdated by one day, is expected to cut rates on Wednesday, they did cut rates by 25 basis points. The outlook is rapidly evolving. Yields on 30-year treasuries have climbed back to multi-month highs as investors eye a less benign outlook for monetary policy, inflation, and fiscal discipline. So it's easy to forget, but bond markets really are just, inflation and interest rate prediction markets with a little bit of, bankruptcy or running out of money prediction chucked in on top. And in the wake of COVID, the big prediction was massive inflation, which we saw. It rose up to 10% in a load of countries around the world, but then it mostly came back down. And the economy of the US, it cooled off. The same thing happened in Europe and the UK and everywhere else. But the expectation was that inflation would continue to fall and that we may even see deflation, so interest rate cuts would continue to come flooding in, and after a couple of years of high rates, we would return to the free money era of 2% mortgages and 0% interest rates. That now seems like it's really not going to happen. And the markets, which are just, 100 million different actions being taken each day, are pretty sure that interest rates are not going to come down any further. The Federal Reserve delivered a third consecutive interest rate reduction and maintained their outlook for just one cut in 2026. The FOMC voted 9-3 on Wednesday to lower the benchmark federal funds rate by a quarter point to a range of 3.5% to 3.75%. It also subtly altered the wording of its statement, suggesting greater uncertainty about when it might cut rates again. Speaking to reporters after the meeting, Powell suggested the Fed had now done enough to bolster the economy against the threat to employment whilst leaving rates high enough to continue weighing on price measures. So yesterday, the Fed cut interest rates by another 25 basis points, but the fear now and what's being priced in by the markets, by investors all over the world, is that we are now only going to get one single 25 basis point interest rate cut throughout the entirety of 2026. That is a long, long way, 3.5% off the 0% interest rates that we used to see and that we got used to investing in over the 2010s. And 3 dissents came with this vote to cut rates by 25 basis points here in December as well. So the Fed is clearly scared of cutting rates too quickly, spiking inflation once again after ending up returning the US to the chaos of the stagnation, the stagflation that we saw in the late 20th century. So for those who are hoping for 0% interest rates once again to save the economy and make us all rich and fix our problems, to stop the private credit crashes, keep on dreaming, because that is not going to come. Rates are going to be higher for longer. Now, finally, I want to talk just a little bit about Argentina, surprisingly enough. Yes, and their new US dollar bond sale, as it is quite a big move for Argentina, that struggling country, but more importantly, it's a win for the US dollar. A bond sale planned for Wednesday may be a small step for Argentina's government at home, but a major move toward a potential return to international debt markets. Officials and analysts view the deal as a dry run for the country's eventual resumption of overseas borrowing. The government plans to auction a so-called bonar under local law, the Treasury's first dollar bond in 5 years. So this alone isn't huge news, it's just a bond sale from a government in loads of debt, which happens every month. But Argentina has over the last 5 years only ever been selling bonds and raising debt in its own native currency. The advantage of that is really obvious, right? You control your currency. In the worst case scenario, you run out of money, you just print more money to pay off your debts. So it's kind of impossible for a country with a sovereign currency, a sovereign fiat currency, to default on their debt. But the risk for investors is huge because the temptation of the government to inflate away the value of that debt by printing that money is huge as well. So why am I talking about this? Well, because Argentina actually isn't unique here. Yes, they're run rather poorly. They've had some improvements over the last year under Milei, and they have been still insolvent. But so is the UK, so is France and Japan and Canada, and Japan actually is moving in the same direction now. Countries all over the world are going insolvent and running out of money. In fact, almost every single developed economy is getting financially less stable each month at the moment, with very few winning out, like Italy or even Spain in Europe. Now, I can see a future just a few years away where other countries all around the world are unable to raise debt in their own currencies in any meaningful fashion, and so they're basically all forced to raise debt in a foreign currency. Just like what we're seeing Argentina doing right now, the currency would have to be the US dollar. A lot is being made about the US dollar losing its grip on global trade, and that is true to an extent, right? Countries like Saudi Arabia and China and India, they are trying to detach themselves from the US dollar and the change that comes with that. So when China, for instance, is buying oil from Saudi Arabia these days, more and more they're pricing that deal in yuan, and they're paying in yuan as well, not dollars. When it comes to raising capital though, the financial world is still firmly in the hands of the US dollar. Investors are still firmly locked into the US financial system. So I think that this new bond sale by Argentina is representative of good news for the US dollar and good news for the US economy, right? Despite the fact that no one really wants to talk about this at all, I do think we're going to see a trend of countries falling right onto the brink of bankruptcy over the coming years and having no choice whatsoever but to raise debt in US dollars because there are literally no investors willing to lend in their own native currencies anymore. That's it for today. Please do comment your thoughts on this new style of video that I've been running the last few days, where I do one main topic for the day and then a few other interesting things that popped up as well. Tell me if you like it, tell me if you don't. My aim with this format would be just to post daily, at least from Monday through Friday, so it would mean more content for you. Make sure to register and save your spot for the last ever passive income cash flow masterclass I'm running this week. The link is down below in the description. That'll take you to a free registration page where you can sign up. But as of next week, I will literally never be running this free class again, so don't miss out. And if you don't want to miss out on my future videos, well, make sure to subscribe again. If you really want to help my channel out though, send this video to someone else. Click the share button, send this video to a friend, a coworker, or a family member and help them learn more as well. In the global financial markets, it's often these tiny changes in the words used by world leaders that marks the biggest shifts in policy and markets. And this week, that is exactly what we've been seeing with some ridiculous changes in Japan in particular. Now, I already made an entire video explaining Japan's return to Abenomics with stimulus checks being sent